at least if you watch some of the market activity and maybe speculated a little bit.
There's that. There's also that Citadel, which was a big investor in Melvin after the meme stock mania, did decide to redeem. But if you recall, Melvin Capital spent most of its lifespan under the radar before bursting into the mainstream last year. Amid that meme stock frenzy, the firm was bearish on GameStop, and amid some other wrong-way trades, performance suffered. The firm lost 39% in 2021 and another 23% in the year through April. Melvin had been in discussions with investors to restructure the fund to once again charge performance fees before recouping those losses against industry practice. Ultimately, investors pushed back, and Melvin these plans. Yesterday, they got the news that Melvin ultimately decided to shut down. In a letter, founder and chief investment officer Gabe Plotkin wrote, quote, "The past 17 months has been an incredibly trying time for the firm," adding that he's given everything he could, but more recently, that has not been enough to deliver the returns that investors expect. Now, the whole GameStop phenomenon had really shaken many short sellers from the market. That's kind of the legacy here, fearful that they could get squeezed. But lately, hedge funds are actually dipping their toes back in amid the market volatility. A new note by Goldman Sachs out just a short while ago said hedge funds ramped up their short positions yesterday amid the market sell-off. The firm said net selling on its prime book was driven by short sales rather than outright selling, which also indicates hedge funds were not the main driver of yesterday's price decline. Scott.
They're certainly being a lot more quiet, though, these days about their shorts, and that is probably the most everlasting largest everlasting change that we'll see. Les, thank you. That's Leslie Picker. We have Brenda Vingello's latest move in the market. We'll do that next.